Welcome back, mates. Crypto Lovers Trading Group. Everyone's doing well. It's part 2 here, following up on the moving averages and looking at the moving averages. And we're kind of overlaying this with our normal technical analytical data. We use our new normal signal indicators, which are the RSI, the MACD, and the cloud. Okay. Now, you want to take a step back. Now, you're using those signal indicators when you're actually trading. It doesn't matter if you're scalp trading, swing trading, if you're using the longer term time frame, or more of our 10-day market timing. And step back and you look at, okay, well, the market like conditions, looking back to look forward, right? So what are we looking to expect in 2022? Okay, that's really what I'm concerned about. Okay, here nearing the end of the year, looking at what we saw in 2021 with the bull market, right? Are the bears on firm footing is really like the question that you want to ask. Like, are they going to have the ability here in January to take this market down, right? Don't really think that the on-chain analytics do not say that at all. The on-chain analytics still are very positive and bullish no matter what, creating buying signals and buying opportunities for Bitcoin. But if you look at technical analytics, that camp, right, that's solely technical analytics, they're not converging on-chain metrics with typical technical analytics. Okay, so if you're just in the technical analytic camp, what are you looking at? Well, this is really what are you looking at here over the last 9 years or so, right? With the moving averages here, and you can see here, this has a 1 day 200, a 1 month 20. Okay, so 20 and 200, looking at that two different time frame, but like seeing them together, like what they look like plotted, like, okay, what's the behavior been between the bands, right, of a 200-day moving average, and then what's happening on the lower scale of a 20-day moving average. Now, the 200 moving average is daily, so over the last 200 days, this is what Bitcoin has looked like. And then your monthly, 20 days, okay, you look at that, and you can see here you've got the green, the orange line and the blue line. So the orange line is here, the blue line is here, right? So you go back and you look from 13. Here are the two lines together here. You go back and you follow them. And you see how they've diverged, right, at times here during this cycle peak, right? See that gap here in here? So there's a divergence there, right? There's a separation. It's a wider gap, okay, of bullishness that took us to the cycle peak here, 214. Then you follow along. The orange line is above. There's a cross right there, okay, 215. Okay, that cross occurs. Look at the market. Market falls down, okay? Base is out about right here. Okay, then we're crossing again here. When we crossed here in 216, now just looking at these two moving averages now, this is not indicative of broader things, just the relationship between these two, okay? We had a run, okay? Continued run. See the separation still? Then they converge here, 219. Boom, down. It got broken, sold down, right? Okay? Everyone can see that right there. Okay? Then they cross again here. We get a little bit of a pop. Then they get back to where the orange line, okay, which is your 1 day, okay, is above your 1 month. And it's been above your 1 month repeatedly, okay, since. Now, what does that tell you? There's no divergence here, okay? I mean, convergence, sorry. They're not converging. Now right? Like, to where we need to be alarmed today. Now, as they get closer and closer and closer and closer together, like here, like we saw here, okay, during peaks, that is when I believe we get another rally from Bitcoin, okay? So I agree with this analysis, like that if they converge together, okay, my estimation is we're going to get another bounce rally into 50,000 because the cycle top peak is not here yet.